Here are the crypto top headlines covered in this video. $500 billion plunge, largest 3-day wipeout for crypto in a year. Next, ex-Ripple board member, Biden advisor joins Harris campaign. Also, crypto market's perfect storm can lead to further massive capitulation. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, $500 billion plunge, largest 3-day wipeout for crypto in a year. The crypto market has just witnessed its largest 3-day sell-off in 12 months amid weak jobs data in the U.S. and revived fears of a recession. The crypto market has just clocked its most significant 3-day sell-off in almost a year, shedding as much as $510 billion from its total market capitalization since August 2nd. The sharp crypto sell-off arrived amid faltering equities performance, with the S&P 500 falling as much as 4.4% in the same time frame. The market stumble has been led by weak employment data, slowed growth among major tech stocks, and revived fears of a recession. Several major companies, including Microsoft and Intel, posted lower than expected second quarter results, and market leader Nvidia was battered by expectations of impending rate cuts in September, which has seen capital flow back into smaller lagging companies. The last time crypto sold off this sharply over a 3-day period was in mid-August of 2023. The price of Bitcoin and Ether have also tumbled drastically amid a sudden market sell-off on August 5th, with the assets plummeting 10% and 18% respectively at the time of publication. BTC and ETH are down 20% and 28% respectively in the last 7 days. Layer 1 network Solana's has been the hardest hit cryptocurrency among the top 10 largest tokens by market cap, falling 30.6% since July 30th. Several market commentators have also looked to a spate of selling from jump crypto as an aggravating factor. The trading firm has offloaded hundreds of millions of dollars in assets from its books in the last several days, according to Arkham Intelligence data. The Crypto Fear and Greed Index, an indicator that tracks market sentiment toward Bitcoin and crypto, has fallen back into fear and currently displays a score of 26 at the time of publication, according to Alternative.me. Moving forward, the crypto market is facing another tough week. Much of the weekend's losses need to be bolstered by an uptick in spot and derivatives activity from traditional financial institutions. Bitcoin has entered the CME gap, but technically it can only be filled during TradFi trading hours, Keith Allen, co-founder of trading resource Material Indicators, wrote in his latest X post on August 4th. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, ex-Ripple board member, Biden advisor joins Harris campaign. Economics advisor Gene Sperling joined Ripple's board in 2015 after serving under Presidents Bill Clinton and Barack Obama. One of the United States President Joe Biden's senior economic advisors and a former member of Ripple Labs' board of directors will be leaving the White House to join Kamala Harris's 2024 presidential campaign. In an August 5th notice, President Biden said Gene Sperling would leave his administration, where he had worked as a senior advisor since 2021. Reports suggested that Sperling will join Vice President Kamala Harris's campaign, with roughly 3 months until the presidential election, with leading candidates including herself and Republican nominee Donald Trump. Sperling joined Ripple's board in 2015 after serving as an economic advisor under Presidents Bill Clinton and Barack Obama. He served in the Biden administration starting in 2021. At the time of publication, Ripple's website did not list the economic advisor as one of its 9-member board of directors. Advisors knowledgeable on crypto? Sperling's departure was the latest reported move of personnel from the White House to support Harris's presidential bid since President Biden announced on July 21st that he would not run for re-election. David Plouffe, a former member of Binance's Global Advisory Board, will also reportedly support Vice President Harris's campaign. Anita Dunn, who attended a roundtable with crypto industry representatives, will reportedly join a Democratic-focused political action committee. It's unclear if any of the advisors will have roles related to cryptocurrency or blockchain, as the Harris campaign is reportedly considering taking a public position on the technology. Certain campaign officials were expected to participate in a roundtable event sometime this week, which will include representatives from crypto firms and U.S. lawmakers. Many experts expect crypto to be a wedge issue in the 2024 U.S. election between leading party candidates Harris, Trump, and Robert F. Kennedy Jr. Trump, who spoke at the Bitcoin 2024 conference on July 27th, made many pledges to attendees regarding his administration's plans for crypto and blockchain. In contrast, the Harris campaign, roughly 2 weeks old, has not provided a clear position on digital assets. The vice president is expected to announce her running mate by August 6th, and potential candidates include Pennsylvania Governor Josh Shapiro, Arizona Senator Mark Kelly, and Minnesota Governor Tim Walz. Our next top headline: Crypto markets' perfect storm can lead to further massive capitulation. A rapid decline in the traditional markets has spread to cryptocurrencies, obliterating them from a significant drop in all major assets. What are the possible factors for this perfect storm? On August 2nd, $2.9 trillion vanished from the stock markets, resulting in the worst day of trading since the COVID-19 crash in 2020. Mounting recession fears and other factors have also plunged the crypto markets, flooding the sentiment with fear. Bitcoin has dropped by 27%, Ether by 34%, and more than $1.13 billion in futures positions have been liquidated. The last day market action has dramatically changed the Fear and Greed Index from greed at 74 to fear at 26, very close to extreme fear. The CBOE Volatility Index, or VIX, which measures stock market volatility based on S&P 500 index options, reached 65, the highest level since the pandemic crash. This indicates that markets could enter an extreme turbulence phase. The reasons for this downfall are not crypto-specific, but clearly affect Bitcoin and especially the altcoin market. On August 5th, 2024, during an emergency analyst call, Maximilian Michelson, a financial researcher at 21 Shares, highlighted the potential drawbacks of the crypto market's unique 24/7 trading availability. He noted that crypto was the only asset that was traded all over the weekend, making it the sole tradable asset as the adverse events unfolded. What is driving the recent sell-off, and how have markets changed so dramatically? Recent market data reflects widespread skepticism about the ability of global policymakers, particularly the U.S. Federal Reserve, to curb inflation without inflicting significant collateral damage. Additionally, many conditions need to be factored into the equation. The markets believe a recession could hit the U.S. economy. On August 2nd, the U.S. non-farm payrolls report showed a steep slowdown in hiring in July, with employers adding just 114,000 payrolls instead of the expected 175,000. With this new data entry, the Somm rule, developed by former Fed economist Claudia Somm, hit 0.53%, according to Fed data, surging from 0.43% in June. The Somm rule is designed to detect recessions as they begin, not as they unfold. A recession signal is triggered if the 3-month moving unemployment rate average increases by 0.5 percentage points or more from its 12-month low. The indicator has successfully identified the onset of every recession in the U.S. since 1970. Therefore, the markets could have understood this latest data entry as a possible sign of an upcoming recession and acted accordingly. Claudia Somm explained to Yahoo Finance that the tool was created so that others would notice when to take action. Despite the negative signal for a recession, she believes that there is a runway and we are not in that danger zone yet. The sudden market upheaval has led numerous market participants and economists to advocate for an emergency rate cut by the Federal Reserve. Jeremy Siegel, an economist and finance professor at the University of Pennsylvania, has called for a 75 basis point rate cut with a subsequent 75 basis point reduction expected at the Federal Reserve's September policy meeting. Japan's yen carry trade sell pressure. A significant factor behind this abrupt market shift is the Bank of Japan's, or BOJ, decision to raise its interest rates for only the second time since 2007. Though modest at just 0.25% from its previous range of 0 to 0.1%, the BOJ's increase has been enough to prompt a notable reaction in global markets. Since the 1990s, Japan has experienced persistent stagflation characterized by simultaneous rises in unemployment and inflation. To stimulate the economy, the BOJ set interest rates to nearly 0%, which created a conducive environment for arbitrage known as the carry trade. Under these market conditions, a prevalent strategy involved borrowing money in yen, converting it into dollars, and investing in assets like stocks, real estate, or cryptocurrencies to earn higher returns. The key to this carry trade was achieving a yield greater than the borrowing interest rate. When executed wisely, this strategy could effectively turn into almost free money, leading many traders to adopt it. Japan's recent interest rate increase sets a new precedent for future adjustments, potentially aligning with the trend of other global central banks implementing record-high hikes. While some traders may have managed to sell their positions in time to secure gains, many market participants may have been forced to sell in a panic to cover their operations. Traders facing significant losses and margin calls are selling their U.S. stocks to raise U.S. dollars and convert it back to Japanese yen to be able to pay back their loans. This sudden change in forex trading can lead to more selling pressure on U.S. stocks or cryptocurrencies in the short term. Disappointing U.S. tech reports reignite fear of potential AI bubble. The latest data on the U.S. economy, combined with shifting global forex conditions, has coincided with disappointing results from tech stocks. Technology shares, which have been a leading force in the U.S. market, represent 42% of the S&P 500 index, a benchmark tracking the performance of the top 500 U.S. companies. On August 1st, Amazon fell 9% after the e-commerce giant reported weaker than anticipated quarterly revenue. Intel stock plunged as it announced a $10 billion cost reduction plan that would lay off 15% of its workforce. Despite positive revenue reports from companies like Meta, Apple, or Nvidia, tech stocks have been adversely affected, suggesting that investor concerns extend beyond earnings results. This has reignited fears of a potential AI stock bubble, further intensifying market anxiety and contributing to increased sell pressure. Investors resort to cash with geopolitical tensions. Geopolitical tensions have been affecting the markets since the Russian incursion into Ukraine in 2022. Nevertheless, the markets have progressed despite the turbulence. However, the latest tensions between Israel and Iran have made the market fear a possible greater war in the Middle East. The last time that Iran attacked Israel was on April 15th, which was in response to Israel's attack on an Iranian embassy in Damascus, Syria. Following the attack, the price of Bitcoin nosedived as the world shook with the uncertainty of a possible war between both countries. There is a fear that a war between these arch-enemies could escalate into a broader global confrontation, given that the U.S. is a staunch ally of Israel, while Russia and China have strategic alliances with Iran. The extent of other countries' involvement will hinge on their willingness to directly engage in the conflict. Nonetheless, a regional conflict in the Middle East could have widespread collateral effects, particularly on nations involved in oil production, potentially impacting global markets. Lena Eldib, the research associate of 21 Shares, noted in an analyst meeting that despite Bitcoin's narrative as a safe haven, it does not consistently fulfill that role. 21 Shares views BTC as an emerging store akin to gold. However, Eldib mentioned that during crises like the current sell-off, people don't resort to gold. People resort to cash, which can extrapolate to Bitcoin's price. Bitcoin price correct expected to intensify. All these conditions exert pressure on all markets, including the crypto markets where money is converted into cash. The popular analyst Rect Capital believes Bitcoin's price downside may last for 2 months before a new bullish chart pattern could emerge to a breakout. As for its price range, the analyst told Cointelegraph to prepare for price levels close to $40,000. At its lowest point, Bitcoin dipped below its 50-week moving average. Without strong buyer support right now, it goes even lower, and it would trigger even more active sell-off as it did in late 2021 and early 2022. If it doesn't hold either, it's worth preparing for a failure toward 42,000. A perfect storm appears to be brewing in the crypto market, with participants needing to take a broader perspective and stay attuned to macroeconomic events that could potentially steer the market back into positive territory. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.